Hello guys, my name is Lavish and today I am going to describe golden rules of accounting. For a beginner, I know how much golden rules of accounting matter. So I will try to make it as much easier for you guys as much as I can. Well, understanding these rules is not much difficult task. It just requires someone who can teach you properly. And the mental exercise of one who is understanding it. That means you. Before starting, what are the three golden rules of accounting? You should know why we need them. So why we need golden rules of accounting? Journal entries cannot be recorded without some rules. The rules which are used to record a journal entry are called golden rules of accounting. Therefore, we need these golden rules of accounting to record journal entries, without which the accounting is incomplete. Before knowing the golden rules of accounting, you need to know that there are three types of accounting, which are or for which we will study after ahead. So as I have mentioned that there are three types of account, which are personal account, real account and nominal account. In addition to these three accounts, there are also three types of account in accounting, and you know what? Each golden rule is associated with separate account. Thus, we have three rules for three types of account, or we can say one rule for one type of account. Now we will study about each of these accounts and rule associated with them. Starting with personal account. Personal account is an account which is related to person, organization, firm, etc. Thus, any account which represents person, organization, etc. comes under personal account. Here are the few examples of personal account. First is capital account. The capital represents the owner of the firm and owner is a person. Therefore, capital account comes under personal account. Second is Mahajans and Sons Limited account. Mahajans and Sons Limited account represent an organization, and any organization which represent an organization and any account which represent an organization comes under personal account. Third is bank account. Bank is an organization, thus it also comes under personal account. Fourth is Ram's account. Ram is a person and all account which represent a person comes under personal account. So the fact is any account which represent a person or organization comes under personal account. I hope that now you guys know what is personal account. So let's see what is the golden rule of accounting in case of personal account. So what is the golden rule of accounting in case of personal account? It is debit the receiver and credit the giver, which means debiting the person who receives from the business and crediting the person who gives into the business. Now let's study about this rule in detail. Debit the receiver. It means debiting the person or organization which has received something from the business. It could be any person such as owner, creditor, debtor, supplier, dealer, customer, etc. It results in decreasing of firm's resources. Let's study an example to make it more clear. Cash paid to Ram. Here in this transaction we have two accounts, that is cash account and Ram account. Cash account is real account for which we will study after personal account, and Ram account is personal account as Ram is a person. So as we are talking about personal account, therefore we will see whether Ram's account will be debited or credited. Let's see the example again. It is cash paid to Ram. Here in this transaction, Ram is receiving cash from the business. Therefore, considering the rule debit the receiver, Ram's account will be debited, as Ram has received cash from the business and the rule is debit the receiver. Okay, now let's move to credit the giver. It means crediting the person or organization which has given something into the business. It results in increasing of firm's resources. Let's study an example to make it more clear. Cash received from Mahajan Limited. Here in this transaction we have two accounts, that is cash account and Mahajan Limited account. Cash account is real account and Mahajan Limited account is personal account as it is an organization. So as we are talking about personal account, we will see whether Ram's account will be debited or credited. Let's see the example again. It is cash received from Mahajan Limited. So here Mahajan Limited is giving cash into the business. Therefore Mahajan Limited account will be credited, considering the rule credit the giver, and Mahajan Limited has given cash into the business. Okay, now let's move to real account. But before that, I have to say you something. I hope you guys got the golden rule of accounting in case of personal account. If not, you can always ask me in comment. or you can also mail me at lavish.4340@gmail.com, or you can also contact me at my blog, which is accountancy.usula.com. Thank you. Okay, now let's move to real account. Real account is an account which represents assets or which is related to assets. If you guys don't know what an asset is, then let me tell. An asset can be anything of economic value owned by an individual or organization and which can be converted into cash. Thus, anything which can be converted into cash can be termed as asset. So, here are the few examples of real account, that is cash account, stock account, machinery account, furniture account, etc. Because all these things such as cash, stock, machinery, furniture, etc. are assets. So the fact is any account which represents assets come under real account. Now let's study what is the golden rule of accounting in case of real account. It is debit what comes in and credit what goes out. Debit what comes in means debiting the assets coming into the business, as real account is linked with assets. Now let us study an example of debit the what comes in. Example is cash received from Ram. Here in this transaction we have two accounts, that is cash account and Ram's account. Cash account is real account as it is an asset, and Ram's account is personal account as Ram is a person. As we are talking about real account, thus we will see whether cash account will be debited or credited. Let's see the example again. It is cash received from Ram. Here cash is coming into the business. Therefore cash account will be debited, considering the rule debit what comes in and cash is coming into the business. I hope you got it. Now let's move to credit what goes out. Credit what goes out means crediting the asset which are going out from the business. It could be any asset such as cash, machinery, furniture, etc. Now let me study an example of credit what goes out. Machinery sold to Ram. Here in this transaction we have two accounts, that is machinery account and Ram account. Machinery account is real account as machinery is an asset, and Ram's account is personal account as Ram is a person. So what we are studying now? We are studying golden rules of accounting in case of real account. Therefore machinery account, so we will have to see whether machinery account will be debited or credited. Let's see the example again. It is machinery sold to Ram. Here machinery is going out from the business as we have sold it. Therefore machinery account will be credited. Considering the rule, in case of real account, credit what goes out and machinery is going out from the business. Now I hope you guys got the golden rules of accounting, both in case of personal and real account. If not, you can always ask me in comment. Okay. Now let's move to nominal account. It is an account which consists of or which is related to all expenses, losses, income, gains, etc. Here are the few examples of nominal account. Salaries account. Salary is an expense. Income received account. Income received is an income, therefore it comes under nominal account. Loss on sale of assets account. It is a loss for the company, therefore it comes under nominal account. So any account which represents expenses, losses, incomes, gains, etc. comes under nominal account. Let's study what is the golden rule of accounting in case of nominal account. It is debit all expenses and losses and credit all incomes and gains. So first we will study about debit all expenses and losses. It means debiting all expenses and losses incurred by the business. Let me study an example of debit and losses to make it more clear for you. Salary paid in cash. Here in this transaction we have two accounts, that is salary account and cash account. Salary account is nominal account because salary is an because salary is an expense as I have mentioned before, and cash account is real account as cash is an asset. Now as we are talking about nominal account, we will see whether salary account, which is a nominal account, will be debited or credited. Here in this transaction salary account will be debited, considering the rule debit all expenses and losses and salary paid is an expense. Let's move to credit all income and gains. Credit all income and gains means crediting all income and gains earned by the business. Let's see an example to make it more clear. The example is interest received from bank. Here in this transaction we have two accounts, that is interest account and bank account. Interest received account is nominal account and bank account is personal account. Now as we are talking about nominal account, we will see whether interest received account will be debited or credited. Here interest received account will be credited, considering the rule credit all income and gains, and interest received is an income for the business organization. So now I hope I have made accounting easy for you. I've tried my best to make it easier for you guys. Hope you guys like it. So I have to say something that I'm just a 17-year-old guy. So if any mistake, just pardon me. Thank you. Bye. Also don't forget to like and subscribe to my channel for more videos like this. The end. Thank you for watching.